If you feel like your trading journey is constantly taking one step forward but two steps back, let's flip those numbers and get you on track with Fibonacci retracements. Hey everyone, I'm Jenks, this is the Trading Floor, and welcome to another episode of Back to Basics. Today, we're tackling Fibonacci retracements, or just Fibs from here on out. Fibs are a way of plotting where price has been to try and anticipate where it's going to go next. The horizontal lines drawn when using a Fib tool often act as support or resistance for price. Let's dive right into some of the most popular settings for Fibs. The default Fibonacci retracement tool looks like this, very colorful with a lot of plotted points and a little bit of an unintuitive way of having to draw it on price. So here, copy these settings for a super simple Fib setup that you can use from here on out. 0, 0.382, 0.5, 0.618, and 1. If you're interested in using Fibs for potential price targets as well, go ahead and add on a negative 0.5 and negative 1. Generally, you want to use the area between the 0.5 and the 0.618 to look for entries. This area is called the golden zone, and it's among the highest probability areas for a retracement in an already trending market. However, if the move that you're plotting with the Fib is the first impulsive move of a new trend, expect price to only retrace to the area between the 382 and the 0.5. To set up your Fib on price, plot your first point at the origination of the impulsive move that you're trying to track. Then go ahead and place the second point at the destination of the move. You can plot Fibs using either bodies or wicks, and I urge you to pick one and stay consistent in both your testing and your live trading. Personally, I like wicks. So we plot the start of the Fib here and the end of the Fib here, and we wait for the retracement for an entry. It's important to note here that Fibonacci retracements give us a point of interest. That's a place where we can expect price to return to with reasonably high probability. But just a point of interest, a trading strategy does not make. You still need other confluences and an entry trigger of some kind. Price action patterns such as double tops or morning stars can pay you dividends when combined with points of interest from Fibs. If you struggle finding a meaningful place to put your stop losses in trades, consider placing your stop loss just on the other side of the origination. If you don't use a fixed risk to reward for your take profits, consider using the destination or zero line of the Fib as take profit 1, then the negative 0.5 as TP2 and the negative 1 as TP3. This combo of entering in the golden zone with a stop loss just past the origination and take profit at the destination should lead to a positive risk to reward ratio on every trade.